Good morning, folks, and welcome to our Monday morning market review, the GoPro Trading Academy. As always, it's Ian Giffen here to take you through the charts for last week and just look to see if there's anything of interest for the week ahead. I think it's fair to say that last week lived up to the expectations we typically have of low liquidity periods. It was generally a retracement week across the board, and not that much opportunity, and generally where there was a signal turned out to be a false signal. So a very scrappy week. Personally, I didn't make any money last week. We had a bit of a loss for the week overall. Generally, as I've said before, I wouldn't typically trade at this time of the year. It's normally a good time to take a break and walk away for a few weeks, being the Northern Hemisphere holiday season. And certainly, even though I've traded through mainly because of you guys, the Academy, to make sure that I'm on point for what you guys are doing. Certainly, I think last week was one of those weeks where we can say with confidence that it was a week where our survival skills were really required. So if you had not allowed yourself to get frustrated last week, if you just recognized the fact that we are in a low liquidity period, as we've discussed before, and that the market was effectively in just a general consolidation and retracement period, you might have had a couple of losing trades, but overall, it shouldn't have hurt you too much. All right, so I think also the weekly charts generally tell the story very clearly, and you know that I like to start on the weekly charts, and the picture certainly on the weekend, looking back at the week as a whole, tells a story of either very flat markets or where we were outside of our channels, a pretty significant retracement period. All right, so starting on the Euro USD weekly time frame, as we discussed a week ago, we had that marginal breakout, which during the course of last week, in fact, it was immediately on Monday, the market pulled straight back inside of that channel with this bullish impulse candle over there. So right from there, and likewise here, you can see even on the daily time frame, that candle bringing us into the daily channels as well. And that really just continued throughout the week. As you can see, this is just a straight series of higher highs all the way through the course of last week, with Friday ending up a strongly bullish impulse candle. Obviously, we had some kind of news come out on Friday, the market reacting to all of the things that are happening around the world, and that just consolidated that overall move for the week. So that picture really is similar to what's been happening across the board, apart from those instruments where even less happened. So the cable here also, as we discussed, we had that breakout pulled back inside of the channel as well here on the weekly time frame. And although on the daily time frame, I think we'd already established that we were inside of the channel and had been for quite some time. So really nothing doing there either. And folks, as always, please, if you have any questions for me, just drop them into the chat box or into the comments below if you're watching this as a recording. And I'd really appreciate it as well if you are watching this on YouTube, that you would hit that like button. And if you haven't already, then please do subscribe to our market reviews and also all of the additional training that we bring out over time. All right, so dollar yen weekly time frame, again, another spinning top, as it's called here, following the one from the week before. So telling the story of a very, very flat market, nothing happening there for us at all. USD Swiss weekly, very flat again, even though we had a bearish candle on weekly. Just looks like that on daily, deep inside of our channels. There's no WM patterns. There's very little breaking of resistance and support, and if it does break, it doesn't respect it when it turns around and comes back. And as you guys know, as price action traders, that's exactly what we're looking for. Here on USDCAD, a week ago, we noted that it had tested the top of our HDC channel, and you can see that the course of last week, it just pulled straight back inside. So it stayed inside the channel. That's just another inside bar, although it is a strongly bearish one, and looking like this on daily. So really, again, nothing of any interest there at all. But when we get to the Aussie, which of course is something that we've been looking at across the Aussie pairs for a while, where we've actually done reasonably well especially considering that it's been August. I think the Aussie has really been the main driver of any profits that we've made. You can see again here on weekly an inside bar, complete reversal coming straight back, and even closing inside the previous phase two's price territory. So, you know, confirming that whatever bearish strength we had here is over, even though technically we're still in a bearish trend here on the weekly time frame. And here you have it on daily, where really it's just that same clear picture. We had on Thursday, generally across these pairs, we had a false signal looking to resume in the original direction. And of course, Friday, that just turning straight around and coming back and confirming the breakdown and the sequentiality of cyclicity across all of these pairs, really. So that really is the end of any bearish movement that we've had here on the Aussie, certainly here on the Aussie USD. And of course, now our HDC channel, taking into account that fourth wave, or the third last completed wave, we're really pretty much in the middle of that HDC channel. It also shows, and this is another picture that's clear across the market, is that when we had these breakouts in the week before, this is the second time, although across different instruments, in the space of 1 month, where we've got a deep V shape here across many of these instruments. So, you know, it's one of the trickiest moments in the market, when we get a very strong turnaround, when that really is just a sign of significant volatility as well as indecision in the market. You know, what we like to trade is volatility, certainly, but at one where there's a directional or consistent directional bias in the market. So that really illustrates why last week was a survival week. Here on the Kiwi again, you know, that breakout. Now, this isn't yet a false breakout, because we have not yet had the breakdown and sequentiality of cyclicity that was initiated by that breakout. But it certainly isn't looking promising at the moment. And the fact that it's closed back inside of the channel, as well as inside the price territory of all the preceding 4 waves, is not great. Right, sorry, folks. I'm just recovering from a bit of a cough cold from last week, so going to be taking regular sips of water. Right. So looking at the, well, I'll come back to that question just now, Greg. So if we just look at daily briefly as well, same thing, there's that deep V shape. So the Kiwi weekly is on 13. So one thing, you guys, and that's well spotted, if I do have a slightly different ATR setting, excuse me, then you must please forgive me. Generally, as you know, ATR 13 is for weekly, 21 for daily, and 30 to 34 on the 4-hour time frame. Right, so moving on to our yen crosses, and this is also where we see a lot of correlation coming through across the dollar and yen pairs, certainly in times of major market events, and I think the last month or two has been indicative of that. All right, so euro yen, we also had that bearish impulse candle giving us an impulse wave a week ago, and a strong reversal coming straight back inside of the channel, and also obviously the price territory of the previous phase 2. So very much inside of phase 2 here on this weekly time frame, as well as showing a weakness. So although we had this reversal pattern show itself after many months of bullish price direction on the yen pairs, we've had that breakdown in cyclicity followed by that breakout the week before, but that is not shown itself to follow through at all. And there's that deep V pattern once again, with nothing for us to do. And if I'm not looking at anything to do for the week ahead, I think you can see why. It's because there is still very little on the cards for us. Right, GBP yen deep inside of the channel, no WM pattern here on the weekly time frame. Didn't even bother testing that support level. And also very much inside of our channel here on daily. So although we had that strong bearish move in the weeks, the first few weeks of August, last week, as you can see, once again, it just pulled it straight back up again. So another strong retracement there. And this is one where we did actually get an isolated high with Friday's price movement. But of course, all this shows us is that, we don't really have any significant cyclicity establishing itself here as yet. But one thing we could say about this is that with these small waves at the top here, this is a potentially valid M pattern. So if you're looking to trade only those and you're ignoring the channel, then all well and good. That's something that you can start looking at. But quite frankly, also with this week being non-farm payroll, I'm looking forward to getting my skates back on again in a week's time. Right, so I'll come back to questions at the end, if that's all right. Swiss yen, deep inside the channel as always, well, has been for a long time here on the weekly time frame. And it looks like that on daily. So likewise, nothing really doing for us, just choppy price action, price behavior. Do drop those questions in the meantime, though, please. CAD yen, similar, testing that support level as we noted a week ago, but pulled back inside of our range. And although we had that bearish breakout, you can see that even first thing last week when we discussed this, we were talking at the open of the strong bullish candle last week. Throughout the course of that day, it just pulled straight back up again inside of the channel. And that really was the end of that for us. So this is one where we had some potential last week, but nothing transpired from that. So Aussie, again, here we've got that bearish cyclicity still technically intact. But once again, we had last week's candle close inside the previous phase two's price territory, showing that although this bearish cyclicity is not over and the trend technically is still intact, that we are experiencing some weakness in it at the moment. And it looks like that as well on daily. Similar picture across the board as always. Kiwi yen, same kind of, well, similar picture to Kiwi dollar, of course, very, very similar. And I see, Surprise asked about overlays and so on. We've had a few overlays, yes, some of them won, some of them lost. I think this would have been a winner on the lower time frame. Yeah, okay, so there we had a winning overlay. So if anything worked last week, it was the overlays. But to be quite honest with you, there's very little across the board. So be it our core strategies or overlay, there wasn't that much, and it was pretty scrappy across the board as well. Euro GBP again, last week just that small spinning top. So here on the daily time frame, however, we did have that breakout. I think that this was one of our losing trades. Very messy price behavior, though, once after we'd had that breakout. And of course, we did also get a close back inside of the channel at some point last week. I think that was Wednesday. So and of course, today, certainly on this broker, we had quite a significant gap at open, which might have just been, again, low liquidity when we had very high spreads at the market open this morning. So I do think that if we just remember that this being trending, Thursday closing outside of the channel, if you're not worried about Friday's bearish candle, and we did have that higher high, there was a potential setup, I think, for this one to go long maybe this morning at the end of this candle. So certainly a signal. I'm not particularly enamored by the general market's behavior at the moment, but technically it's borderline. And if you've got very few filters, then this morning this would have been a signal to go long on Euro GBP on the H4 impulse. Euro Swiss, so just again, last week we didn't even get the close outside of the support level here on the week before. It tested that support level, but closed inside, and last week just came back a little bit further. It looks like we've got even more price movement, though, on this pair this morning than we had for the entire body of the candle throughout the course of last week. So again, very, very scrappy, double bottom over here inside of the channel. My least favorite pair. Not interested in trading any of that. Euro CAD, very scrappy here again on weekly time frame. Nothing to look at. That bearish inside candle for last week, meaning absolutely nothing to us. We spoke as well last week about the breakout on this 1, 2, 3, 4, 5. That being Monday, Tuesday, Wednesday, Thursday, Friday. So Monday was this bearish candle. We were talking during the course of the morning last week, Monday, and again, by the end of that day, it had closed back inside of the channel and has stayed there ever since. Euro Aussie, let's just look at weekly quickly. So inverse, obviously here with the Aussie being the term pair, but a similar inverted picture to what we've seen across all of the Aussie pairs that close back inside of the phase 2, showing that although we still have a bullish trend here, it's showing weakness. We've also on the daily time frame had that breakdown in cyclicity through the course of the latter course of last week. And certainly, even though this was Friday, it's a bearish impulse candle, also giving us an impulse wave, giving me reason therefore already to ring that high. So as far as I'm concerned, that is absolutely over and done with. We can't have any other kind of result to that. So again, more looking across all of these pairs, there's nothing for us to do really. Euro NZD, similar picture again to these Kiwi pairs, pulled back inside of its channel, and done so quite strongly as well. We did have this bullish phase 1 wave testing that. So if you're trading overlays purely on any phase 1 wave, then yes, you would have got a winner out of that one. But yeah, as I say, not all of the overlays work, that's for sure. Here we go, GBP Swiss, moving to our GBP crosses. Last week also just doing very little, closing back inside of the channel, almost more movement in just the course of this morning than we had through the whole of last week. And again, we had that breakout in the latter part of the previous week, and then even on Monday closing back inside of that. Another overlay here, and I think we also looked at this is one of our potential hybrids that got stopped out. So we had an overlay here, that one followed by a bearish hybrid that didn't work out, and well, nothing has happened since then. GBPCAD inside the channel, nothing really of interest during the course of last week, but again, we had that test as we discussed a week ago, pulled straight back inside, nothing doing, no interest to us at all. GBP Aussie, another Aussie pair showing that similar price movement. The difference here, I guess, being that this one has managed to stay outside of the previous phase 2's price territory. I'm assuming that potentially, it depends on your filter here again. If you're using core strategies, remember, if you're using an aggressive approach in terms of your filters, this being an inside bar means that technically you can still treat this as a potential continuation of this wave. However, even this morning, we've had a lower low, meaning that high would need is already being ringed, even though it might take the rest of the week for us to be able to draw in our new wave lines. That is very much the case. So just remember that, folks, if you've got a situation like this, and remember on the impulse strategies, you do have that aggressive option of treating an inside bar as a continuation. First thing is that that's a very strong bearish candle. Secondly, the market this week has already made a lower low, therefore meaning that high must be ringed. Obviously, if you're using multi-time frame analysis, we have had a breakdown in sequentiality of cyclicity, meaning that the bullish trend is over, meaning that bullish wave is over as well. And yes, this was another overlay. Before surprise, asked me that question again. And I think this one actually got stopped out. It didn't win. It stopped out a very tiny loss with that spike over there. Still a bit annoying because it would have ended up being a winner, but that's trading. Right, last of the GBP crosses, GBPNZD. These, you can see the correlation across these pairs very, very clearly. Nothing doing for us, staying deep inside of the channel here. But here on the daily time frame, that strong bearish candle on weekly looking like this on daily, where on Friday, technically, we did get a close outside of our 4-wave channel, testing this general support level. So, if this is a bearish continuation, then certainly this is probably one of the most interesting pairs that we've seen so far for us to look at, to trade through the course of this week. So last of our GBP crosses being the first interesting instrument, but of course, it would need to break below this level. And what's happening at the moment, of course, is we're sitting inside of both of those channels with the current price level. So as price action traders, what do? We wait and see and wait for the market to prove itself to us before we do anything else. And we do need this market still to prove itself to us. CAD Swiss, another one of these weekly trending markets. So we've been inside of the channel before, these overlaps with each other's price territory, although this was a valid M pattern beforehand. But last week, that bullish candle coming up. And so far that, even though we might want to treat this as a continuation, if you're using an aggressive stance on your impulse strategies, just watch out for a bullish continuation here. Looking at this on the daily time frame. So if you were going to do that, then Friday's close, bearish close here, would have been a potential setup for you to short this, as long as you don't mind trading on a class 3 M pattern on an execution time frame. So again, depending on how aggressive you want to be, this is not looking very good if you had done that with the Friday's bearish impulse candle. But again, that's trading, and the way the markets are behaving at the moment, I'm not particularly surprised. Aussie Swiss, another Aussie pair showing that overlap with last week's candle close inside the phase 2. Weak, but still technically trending on the weekly time frame. And you can see we've just had this long series of higher highs through the course of last week. So I think already Wednesday, it closed back inside of our channel. So that's disqualified any valid M pattern there already. And it's just going higher even again today. Aussie CAD, one of the weakest of the Aussie pairs in terms of the fact that, as I said, we've been looking at these Aussie pairs for most of our trading opportunities over the last month or so. But here again, you can see that we actually had a bullish engulfing candle last week. I haven't yet drawn in a bullish wave over here because although it's an engulfing candle, it's not an impulse candle, certainly not an impulse wave. So if we do get a bearish continuation over here, that will end up being a non-relevant isolated high. Having said that, it could just as easily ring that low through the course of this week and come back inside of the channel again with a breakdown of the sequentiality of cyclicity. Because what is noteworthy here is that we have not had a lower low, lower close in this bearish wave. It's largely been sideways. And you can see that here on the daily time frame, where we've had this general area of support largely respected now for quite some time. And yes, although we did have that lower close on a couple of days over here in the latter part of the previous week, those are the only ones, and it's pulled back inside of that. And in fact, on daily time frame, we've now got a bullish phase 1 wave here. There we had phase 2. So that is very much over. Not only are we inside of the channel, there's no bearish cyclicity at all. So if you're using a multi-time frame approach, then you're also able to say that this bearish wave is in fact over on the weekly time frame. Aussie Kiwi, right? So the only pair, as you can see on the weekly time frame, we've still got an extended phase 1 wave and have had now for several weeks with a whole series of lower lows. We have not had a single isolated low now for quite some time on this pair. Having said that, the quality of this move, as we've mentioned before, hasn't been particularly great. We have had quite a lot of trades, and some have won, some have lost, but obviously convexity doing its thing. Overall, it's been one of the pairs that's helped us to stay in profit. But last week, we've now got that non-impulse candle for last week. So not the greatest of looking position. This trader having gone short, not sure why. I can't actually tell you what the reasoning is behind this, because it looks like they've chased a trade here to me. But in any case, that's for me and them to discuss. So I wouldn't necessarily take this as being the right thing to have done here. But you can see again here on the daily time frame where we've been in this bearish wave now for well over a week. And in that entire time period, we've had one and two impulse candles. So the rest all not being impulse candles. And let's see what happens. So we had a marginal close. I think did this close outside? Let's just check 17.7 low here, 19 years. So by a couple of pips on Thursday, Friday closing back inside of the channel again. So, you know, considering that this is the most significant of the trending markets that we've got across the board, that's very, very scrappy price movement that we've seen and have seen here on this lower time frame compared to weekly, obviously. So having a quick look at the 4-hour time frame. Similarly, you can certainly see on Thursday and Friday how scrappy it was. You know, sudden movement coming to an end, and just the market really generally going sideways. Not that Aussie Kiwi is our most favored trading pair, but it just goes to show that there's very little else to look at. Kiwi Swiss, similarly, let me just have a look at weekly first. So, you know, you can see that, although on this one a little bit more bearish than, a bit more impulsive, I guess, than the other Kiwi pairs. We have continued, I think, to have a close outside here at the end of last week, but it's very marginal. Technically speaking, though, this bearish cyclicity is intact, but of course, this close is very much inside the previous phase two's price territory. So the fact that this support level was not respected, or preceding support level was not respected as resistance after it was broken, again showing very significant weakness in the markets that we trade. And here on daily, we had an overlay at the end of that bearish phase one. This was one of the winners, so that was great. I think we had a loser followed by a winner, though, to be honest with you. Yeah, so here we had an overlay that was stopped out, and here we had another overlay that ended up winning. So the one compensating for the other, pretty much. But otherwise, yeah, it's just gone straight up. And we did have, I'm not sure that this should be looking like this, because I think that is actually an inside bar, meaning that this will probably still be a continuation, possibly. Yeah, so I don't think we actually have that being a relevant isolated high there at all. But anyway, not exactly something that we're particularly interested in trading at the moment. Kiwi CAD here on a weekly, again, absolutely flat sideways. And although we've had a continued bullish wave through the course of last week, you know, it's deep inside of the channel. There's very little for us to look at in terms of consistent breaking and or respecting of support to resistance across the board, looking at all of our pairs. So those are all the currency instruments. Having a quick look at gold here on a weekly first, it had a pretty good week last week, recovering further from that flash crash that we saw a couple of weeks ago. So, you know, anyone who'd used that as a buying opportunity for the gold bugs out there, you've done pretty well. So good for you. We are still inside of the channel formed by that flash crash here on the daily time frame. Some bullish cyclicity showing itself within that channel, but certainly not strong, and therefore no valid WM patterns at the moment. That might well change through the course of this week, but of course we are coming up to this quite strong resistance level here. So as always, we wait for the market to prove itself. The only things that have really showed continual movement and consistent movement, despite all of the interesting events happening around the world, are the stock market. So here on the Dow Jones, though, we just had a bullish candle for last week following that bearish low test. Nothing really of interest for us. And you can see here also very much inside of the channel, no valid WM pattern, but it all looks a little bit different when we move on to the S&P 500, where last week was a bullish impulse candle, continuing this very long extended bullish impulse wave. And also we saw at the early part of last week a bullish breakout of that previous channel. And if you were waiting for a setup to go long on this, well, this morning is your opportunity, obviously, with that bullish impulse candle. And this being certainly a valid W pattern. It should be it's a class 2 W pattern, so pretty strong. And if you wanted to take it, that's certainly a valid setup for a daily impulse, and you can look at trading that on the lower time frames as well. And similar picture on the NASDAQ. I mentioned before that this is like very often a bit of a bellwether instrument for me. So it's a very strong bullish impulse candle last week. And you can see the continuation after we had the breakout as well here of that previous channel. And likewise, similar picture. These are obviously very correlated instruments, the US indices. All right, and that's it, folks. That's pretty much it in terms of all the instruments that we do look to trade, especially those that we trade on the funded account. So just to reiterate what I said at the beginning, remember, these are the kind of markets that bring out our survival skills. We need to be able to make sure that, as always, when things are not favorable, we lose as little as possible, so that when, at the end of the day, the markets do start bringing in favorable trading conditions, we're able to jump in, boots and all, and make the most of it and still have capital to trade. So be very careful in these times. Make sure that you're following your trading plan. If you feel like your trading plan is too aggressive because the depth of your drawdowns you're struggling to deal with, then that's something that you should look at adjusting after some considered thought on that. Because remember, when you move to a more conservative approach, it does mean that you will miss out on some of the excess profitability in the future when the markets do conform to the conditions we're looking for. But remember, it's not just about making money. It's about, first and foremost, limiting downside and managing your risk. So if you do feel that you've been overly aggressive, now's the time to potentially look to make some of those adjustments and go with that. Right, just to come back and answer a question here quickly. Surprised asked me about the Aussie. And folks, again, if you're watching this as a recording, please do hit that like button. It really does help us to gain a bit more exposure out there. Much as we like being a small academy and devoted to our members, we would like to grow a little bit more. Right, so here we have Aussie, and Surprise asking, do we have a on the daily chart overlay? Yeah, looks pretty much like it. The one thing I've mentioned this before. So anyway, let me just come back to what Surprise is saying. We've been in a bearish phase one wave of a bearish trend. We've had a breakdown in that sequentiality of cyclicity on the lower time frame, proving that that wave is over. And now we're seeing the setup for an overlay today. Yes, quite right. So the one thing I have mentioned before is what I don't generally like doing is jumping into trades when a lot of the movement is over. And that's normally visible when you can say that it's come back up against what was a broken, in this case, support level has now become resistance. We back up against that resistance level here again. So as you know, the overlay is something that is a work in progress for us. It's done well for us. I'm very happy that we've had it over the last month or two. But we are looking always to tweak it. I've mostly been focusing on trading all of our strategies only on the 4-hour time frame, because that's where most of the action is. And also that's where I'm doing all of the development on the trade manager and making sure that the trade manager is there to act as a very valuable assistant for those of you who are looking to trade those more challenging timeframes. All right, folks, so that's it from me. I'm going to be chatting to a couple of you again this week about the start of our mentoring program, which we're going to be kicking off in the next week or so. So do look out for those. And for those of you where I had to cancel last week, I do apologize. I'm still recovering a little bit from a little bit of a cold sitting outside by the fire when the weather turned. But that's the pleasure of living in the place where we do live over here, as I can do silly things like that. All right, folks, I hope you enjoyed today's session. As always, if you've got any questions, please do drop them into the comments, and I will chat to you all through the week. Take care. Bye for now.